Hello, good morning, everyone. Today we would be discussing different aspects of accounting. Uh, and today's chapter is actually the combination of two different chapters in our textbook. So we will discuss integrated reporting, sustainability reporting, social environmental accounting, um, and in the second part, we will discuss the ethical behavior of the accountants. So, in terms of the first part, what are the objectives? The main purpose of this chapter is to provide an overview of the impact of sustainability on financial reporting. Um, and more specifically, um, we will understand the objectives and framework of integrated reporting, be sensitized to the broad range of factors that companies need to address to reduce the future strategic risks. We'll understand the historical context of integrated reporting or social environmental aspects of accounting. Would be familiar with the major organizations who have contributed to the development of integrated reporting and the resources and the standards provided or developed by the organizations. And we would understand what's the role of accountants in terms of accounting, in terms of reporting, in terms of gathering data, and in terms of auditing and assuring the reports prepared by the organization. So, what is the concept of integrated reporting, and why is accounting talking about some aspects which are not usually presented in terms of numbers? As a student of accounting, we know accounting represents everything in terms of money, in terms of numbers, in terms of figures, in terms of dollars, pounds. What we are talking about, integrated reporting, as we know in all our modules, in most of our modules and courses are now um, considering the aspects of sustainability. So accounting is not an exception. Accounting also consider different aspects of sustainability. Accounting also wants to contribute to the sustainability, um, to the aspects of climate change, to the aspects of different kind of emissions, pollutions reduction, or um, increasing the environmental standards or standards of social living. And therefore, accounting not only limits itself into numbers, money, profit, revenues, but accounting also in modern age is relating to um, the issues that actually hinders organizations or the societies in developing their standard of living, that hinders the use of the resources or make them sustainable for the future generations. So that's why accounting is talking about social accounting, finance, in uh, beyond financial accounting. Accounting is talking about climate change, carbon emission, mercury emissions. Accounting is talking about desertifications, deforestation. Accounting is talking about various kind of pollutions. Accounting is talking about water, different kind of wastages. Accounting is talking about recycling, reprocessing, reuse of the assets and resources, and in different way accounting wants to contribute in developing the use of the resources and maintaining them for the future generations. So the essence of integrated reporting is actually linking the corporate strategy to the current and future environments that the company faces. And the company, as we know, the companies are not situating anywhere where there is no impact of on the environments, on the society. So organization is a part of the society. Organization should accommodate the social values and concepts and try to contribute to improving the life of the society. And that's why the corporate strategy should be incorporated and accommodating the environments, the future environments and current environments. So this is what the integrated reporting is thinking, to incorporate or accommodate the social problems, environmental problems that the organizations or the companies faces, and explaining the company's value proposition and what the company wants to offer to the society, to the environments, what's the values of the organizations, uh, what what is their policy, what is their standard in terms of, say, modern slavery, in terms of climate change, in terms of carbon emission. What's the standard of this organization? What they are doing, what is their position in case of reducing um, emissions, carbon emissions? What's their positions in case of increasing the sustainability, improving the sustainability of the resources that the organization is using? What is their position? That's the value proposition. This is what they explain in sustainability report or reporting. Reporting on the relation of the preceding to economic, environmental, and social dimensions, as we mentioned before. So the accounting is not reporting only the money, only revenues, only profits, but also the report on environmental issues, social issues, in different from different dimensions, and we will see some of them today. And companies they still need to achieve good economic performance, but must realize that management of environmental and social factors are an important part of that. So it doesn't mean that the accounting is now focusing on environment and social factors only. No, they will achieve their financial performance. They will excel in financial profitability, but not destroying the society, but not considering the impacts on the society or community. So they will do their profit, they will earn their revenues, but not not sacrificing the social resources, but not sacrificing the human resources, but not destroying the community. All right. So this is what the integrated reporting means. It integrates the financial performance with the community factors or social factors or environmental factors. So why environmental accounting is important? As we know, if we ignore or accounting or the society cannot be isolated from the society, right? If the society is destroyed, if the environment is destroyed, if the climate is destroyed, then what would be the situation of the organization? They would not be able to operate. They will not get their raw materials. They will not get their human resources to run the organization. If the people are sick, if the people are, say, not healthy, if the climate is not favorable, how can you get raw materials? How can you expect the people will work appropriately? And that's why uh, we cannot ignore the adverse impact of the organizations on the organization's performance. So society, community, environment impact on organization's performance. So or if the society or the environment is not favorable, organization would not be able to perform appropriately. For example, rectifying um, pollution, possible claims for compensation by penalties has adversely affected reduced sales due to the adverse publicity. See, if we know that this particular company emit lots of emissions, this particular company destroyed the social values, this particular company don't provide appropriate rights and rewards to its employees, we will have a negative perception about that company. People will not be interested to purchase the products of that company. So that's why organization need to consider the social and environmental aspects and values as well. Information of these areas can compensate for more of the limitations of traditional financial reporting. So in case of making decision, we not only consider profit and revenues and money and assets and liabilities, we also should consider if we establish a business here, what would be the impact of these organizations to the community, to the society. So not only there are some limitations of financial reporting. Financial information is not all that we base our decisions. So we have to consider other non-financial, social and environmental factors and values and um, impact on the society or community. We have to consider those aspects in case of making our decision as well. So um, and influence assessment of risk associated with the company. So we have to consider the uh, risk of production, risk of emissions. For example, now government wishes to um, reduce the cars that are operating by diesel cars are now kind of abolishing from the society, from the community. Why? Because it emits lots of carbon emissions is higher in terms of in case of the diesel car than the petrol or the electric car. So we have to consider those. And what about a particular company? If we talk about if a particular company should consider um, what's its what's its risk associated with the society or community if they emit lots of higher amount of carbon, higher amount of other pollutants to to the society. So the government is trying to regulate the corporations as well by um, by the reporting process of, say, pollutant reporting in UK as well. Inventory pollutant inventory, you will see, you can search and find out a website that's called pollutant inventory, where um, every plant, not only every company, every factory of a particular company need to report to the government on hundreds of pollutants: carbon, lead, arsenic, um, mercury, and hundreds of pollutants. Corporations or the factories are supposed to report to the government. Why? Government wants to see or regulate or reduce how much companies or factories are emitting or creating problem for the society or community. And even you may know that based on the carbon emissions, companies are supposed to pay higher amount of taxes, right? Even the countries are paying penalties for emitting higher carbon to the atmosphere. So this is how the environment and the society can be protected. And why integrated reporting? Also, there are some limitations of financial accounting. So financial account cannot, in some cases, don't give us sufficient insight into risk other than financial. We just can see assets, liabilities, revenues, expenses, these sorts of things. But what about the impact of the organization on the community, on the climate, on the society, on the atmosphere? Uh, we don't know. We don't know from the financial accounting. That's why we need integrated reporting. That's why we need social and environmental reporting or sustainability reporting. And also we have some problems dealing with intangibles in terms of financial accounting. Intellectual knowledge, quality of human resources, changes in reputation, organizational culture, product obsolescence, change in legislations. These are the aspects that actually cannot see in our financial reports, in our financial reporting process. And that's why we need integrated reporting. And there are some externalities, there are some external aspects that we don't consider, that we don't incorporate in our financial reporting, that that's are ultimately company, in some cases, company may or may not be responsible for those, but they need to capture, they need to incorporate, they need to um, report on those issues to the decision makers, to the investors, to the stakeholders. The stakeholders have the right to know about those aspects. For example, if you buy a house now, you can see how much electricity the house need, what's the band of the uses of gas, how much, what about the situation of the carbon emissions, what's the situation of water uses, different aspects we are considering. In case of buying a car, we consider these aspects. And the same thing, and even more important in case of a company or corporations where the manufacturing operations are happening, it's even more important in terms of the impact of the corporations to the society and to the environments. Where is UK in terms of integrated reporting? So yeah, there are UK frameworks, and there are different legislations where UK government is compelling corporations or asking corporations to report on different aspects of the social and environmental issues. So the primary role of accounts to report on economic performance, obviously corporations will report on economic financial consequences of the organization. However, they have to consider the impact of the organization's policies, strategies on the employees, on the community, and also environment. This is what the UK frameworks suggest. And also in terms of, though we are now out of European Union, but obviously the laws, the practices um, of the laws of UK would suggest organizations to report a strategic report, and uh, which requires organizations to provide their positions, um, like on positions on the impact, or the impact on the society, on the community, on the employees, or in terms of human rights, or what is called the modern slavery and human trafficking, child labor, these kind of aspects. uh, Organizations supposed to report. And if we see the integrated reporting frameworks as a separate organization, International Integrated Reporting Council, IIRC, developed an integrated reporting framework structure where organizations are supposed to report, um, uh, if they follow, because the Integrated Reporting Council is not a regulatory authority. They provide the frameworks, they suggested the frameworks which organization can apply in case of preparing their reports. So which actually incorporates different social and environmental aspects in the financial reports, in addition to the financial numbers, uh, which actually helps decision makers in terms of making investment decision, uh, or financial decision in relation to a particular company. So these reports or the frameworks actually suggest organizations to report on financial aspects, people, intellectual property, property rights, equipments, and customers, suppliers, community, ethical culture, and different uh, aspects of the social and community and environmental values or sustainability issues that is incorporated in the integrated reporting frameworks. So, traditionally, what we um, recognize as the achievement or the progress of an organization? We usually consider the money, all right, capital, net worth. What's the increase of net worth? What's the increase of capital? What's the profitability? Right? But at the new concept, in the modern concept of achievement, not only consider money, but also it consider or the need to maintain, the need to achieve financial profits, as we mentioned before, they need to increase or improve their financial profitability, but not sacrificing the society, community, environmental, social aspects, or impact of the organization, or deteriorating the environments or the society. So the performance is now consider the monetary aspects as well as the social and community aspects or capitals as well. So what is integrated reporting capitals? What is capitals mean in case of integrated reporting? Is, as usual, the traditional monetary measure is in place. We are not ignoring monetary aspects. We are not ignoring monetary performance. That's true. The organization is being evaluated. When you invest some money, you will look at the um, the profit or the earnings that you may expect from the organization. But you should not ignore other aspects. If you ignore other aspects, for example, if an organization is not sustainable, they would not be able to maintain their monetary or financial capital in future. They would not be able to do it. And that's why, for the interest of the company itself, they need to focus on other aspects in addition to the financial aspects. So the capital is being manufacturing is also considered a capital in terms of in case of integrated reporting, where the systems of producing goods and services for the customers and would include manufacturing facilities, inventory, but not includes the equipment, but also includes the equipment, etc., used by an accounting firm to supply services. It's not only about money, but also sustainable, appropriate use of the manufacturing facilities. Right, appropriate use of the facilities is also important so that it becomes sustainable for the future generation. Also, it incorporates the intellectual capitals, right? The knowledge, the human resources, right? It's not about just using the manufacturing plants or the intellectual or the human resources as you wish to maximize your profit. No, you have to protect these resources to maximize the future benefits, future generation, to support this knowledge and expertise for future generations. So this intellectual capital includes the human capitals, right? As I mentioned before, the experience, the training, and commitments in relation to human resources of the organization. You have to develop human resources to maintain human capitals, and social and relationship capitals. That's important. That's important. You are not isolated. The whole globe is now working together, so you have to maintain the relationship with different stakeholders. That's an important resource. The more you are connected to other organizations, the more you are connected to the financial institution, the more you are connected to the government rules and regulations, you are more strong in terms of your base, in terms of your financial performance. So the relationship is also recognized as capital in integrated reporting. And also natural resources, natural capital. is also given is given significant importance in integrated reporting, like oil, gas, uranium reserve. We have to maintain it. This is not just about we will just use these resources. We have to maintain these for the future generations. We should not ignore them. We are not the only people, right? Hundreds of maybe 100 years, people will come to this globe. Hundreds of years they are supposed to use as well. So we should not destroy these natural capital or resources or the ecosystems, right? So that the future generation may not use those. So if we go to the beach, if we use the resources, natural resources, plants, we have to maintain them. We will enjoy it, but at the same time, we have to maintain it for the future generation. This is why integrated reporting, to make sure that the stakeholders are accountable in their use. The corporations are accountable in maintaining their capitals. So how can these being measured as being performance, right? So there are some examples of measure in case of manufacturing, productive capacity, age of equipment, right? In terms of manufacturing, what's the age of equipment? What's the productive capacity of the resources or manufacturing is being recognized as a measure, as a performance. Intellectual capital, number of patents, regulatory approvals of the new products, how many products you developed, how much knowledge you developed, something like that. And in case of human resource, human capitals, level of training, staff morals, moral survey, and turnover rates, how much people are moving from one organization to the other, diversity measure, health and safety, accident rates, fatalities, death rates. These are kind of measure. We measure the performance of the organization, how many people died in this organization, how many people, how people are healthy when they work in these types of industries, in these types of organizations. Will recognize the organization's performance. Social and relationship capital, MESA, we have to um, have a system for gaining stakeholder feedback on the relationship, results of stakeholder survey and action taken, human rights abuses, right? So how much, what's the strong relationship of the employees with the organization, organization is meant to what extent they are maintaining the human rights, right? Or the employees' rights in the organization. So these are being measured in the organization. And responsible products development, compliance with laws and regulations, these are also social capital. Natural capital in terms of greenhouse gas emission, as we mentioned before, carbon emissions, how much you are emitting. So you can compare these organization to the other organization, right? And in terms of different pollutants, in terms of different natural resources, you can evaluate organizations' performance, right? Energy uses, how much energy you need to run these types of industry, these types of how much water you use. So you need to efficient in case of using water, in case of using mineral resources, so that you are not the only organization that you are using a significant amount. You should not deprive other organizations that are operating now or that would operate in future. So we can evaluate the performance and see the impact of the production and this on or the impact of a particular organization on different natural capitals. And for this particular purpose, for reporting and evaluating the performance, there are different um, there are different organizations which actually provides us different frameworks. As we mentioned before, in case of international integrated reporting council, this is an organization that developed integrated reporting frameworks. And global reporting initiative is a separate organization which also provides us a lots of account environmental and social reporting standards. If you just search global reporting global reporting initiative or GRI standards, you will see maybe 40 or 50 around 40 to 50 social and environmental reporting or accounting standards, right, which guide us how we can report about water account, water reporting, water uses. How can we report uh, um, carbon emissions? How can you report different wastages, right? Uh, how can you report about recycling, reprocessing, production process? So you will have say lots of standards. So this is the organization which provides us these reporting standards, which gives us a guidelines how to measure these issues, how to evaluate these issues, how to report these issues in our in our reports, in our sustainability. How can we prepare? If you go to the websites of different companies, you will see environmental reports, you will see sustainability reports, you will see modern slavery reports, you will see TCFD reports, you will see say child labor uh, uh, statements. So there are different social and environmental reporting initiatives, which are being guided by these reporting standards. As we mentioned before, and these are some other guidelines and frameworks as well for sustainability or social and environmental reporting. Another organization, the Sustainability Accounting Standard Board, so this is an US-based organization which produced guidelines for 79 industries. How can we report or account for sustainability? And UN organization, a global compact, United Nations Global Compact, which has developed 10 different principles which cover human rights, anti-corruption, labor rights, and environments, different aspects of social and environmental issues in that global compact that organizations are actually supposed to maintain and report on their performance annually. And also, Carbon Disclosure Project is also a worldwide um, information collection mechanism which evaluate the company's performance on, on the carbon disclosures. Um, so this is an issue, and carbon disclosure actually, carbon emission actually impact on our climate change significantly, and we see the impact of climate change in our day-to-day life. So these are also some guidelines and frameworks actually in place for the organizations to follow um, in case of reporting. So so far we understood the environmental and social or integrated reporting aspects. It's not just a matter of one day or just 1 week or one year. These frameworks came in place, but it has a long history, right? Lots of initial reporting of environmental reporting has been actually started in 1960s or 1970s, um, to to when actually we are facing different sorts of social and environmental um, uh, fatalities, environmental impacts in our day-to-day life. And that's why the governments and also UN and other uh, NGOs and organizations actually in has been trying to um, create some sorts of awareness about our rules on in case of developing the environmental sustainability, social sustainability for future generations. And in 1975, actually, UK Conceptual Frameworks Accounting Standard Steering Committee, which actually developed a framework which asked the organizations to satisfy some information needs in relation to these aspects, which comprise the statement of corporate objectives. What's the corporate objectives in terms of different social values, in terms of environments, in terms of pollutions, or something like that. Statement of future prospects, what they want to do in future, what are the mechanism in place, what are the things they are thinking to uh, uh, to accommodate or to develop, or to what extent their plan in in investing for developing technologies and mechanisms for improving organizations' performance in terms of different social and environmental aspects. Employment report, the started in 1975. So what about your employment? How fair is your employment? How you are treating your employees in your organization? How much you are giving their rights? Uh, so and organizations were asked to report or to prepare a statement, what is called value added statement. Value added statement includes some social and community aspects that we need to maintain, that you need to provide in that statement. What is value added statement? Value added, as we know, what does a manufacturing organization actually do? They purchase some raw materials and process it and then finally sell it. And what about the value of input and what's the value of output? If we see, we purchase some raw materials and then we add values. We spend some other expenses. Employees spend their time, we process it, and the value of the product actually increased. So what's the input? For example, we purchase the raw material for 10,000, but the output that we are selling is actually 100,000. So what the value we added? So 100,000 minus 10,000, 90,000 is the value added to the products. This is what the value added. So these 90,000 is actually is going where? Some of these 90,000 is going to the government in terms of tax. Some of these 90,000 is actually we are providing to our employees as salaries. Some of these 90,000 actually we are paying as interest to the bank, to the financial institutions. So this is what the distribution of the value added we are supposed to show in our value added statement. Yeah, this is what I just said in the previous, so that the distribution of the value added. Some is going to the employees as salaries, wages, contribution, superannuation. Some is going to the government as tax, and some is going to the shareholders as dividend or loan providers as interest, and also some is being actually this is used or reinvested in the organization. This is what it shows, how to what extent the organization is responsible to different parties, to different communities of different people, right? How to what extent we are providing salaries and benefits to our employees, to what extent we are responsible to the government, to the communities. So this is what it shows actually. So to what extent the organization is actually providing the rights of different people. So in case of sustainability reporting or integrated reporting, there are different terms or concept actually used. If you see, you will see corporate social CSR report. You will see, yes, it's not only sustainability report. In some organization can say corporate social responsibility report, CSR reports. Okay, to what extent the organization is responsible to the community or to the society, right? Triple bottom line reports or reporting. You will see different organizations or different companies in different countries, they use triple bottom line reporting, which includes economic reporting, environmental reporting, and social reporting as well. So these are the uh, um, uh, triple block or triple aspects, three different aspects that is being considered in case of reporting. Or in some cases, you will see ESG reporting, which actually means environmental, social, and governance performance. Right, so environmental, social, and governance issues are being reported in the sustainability or integrated reporting. Um, companies' obligations under EMS. So, what is EMS? Environmental Management Accounting System, right? So, what is the responsibility? So, the companies actually participate to adopt different environmental policies in their organization, where organization actually complies the environmental legislations, rules, regulations. They try to prevent the pollution, different types of pollutions and emissions in the environment or to the atmosphere, and achieving continuous improvement in terms of environmental performance. They try to improve their performance in these aspects in everyday life. This is what the organization's management accounting performance or systems in place in the organization. So what is the role of accountants in this? So yes, so organization supposed to complies the environmental rules regulations that try to minimize their emissions and pollutions to the community, to the society and environments, and try to improve their situation by investing in different kind of technologies so that they can improve their performance in this particular in, social and environmental aspects. And one of the reporting or separate reporting of the companies is modern slavery and human trafficking report or the statements in UK. This has been there was an act or law initiated in 2015 where organizations are mandated or organizations are compulsorily bound to report on the human rights and in their own operations and also in the operations of their supply chain. So in the section 54, subsection 5 of that law it provided the details of what an organization is supposed to report on in the modern slavery and human trafficking statement. So they have to provide the details of their organization structure, business, and their supply chain, their products, what are the activities they are doing, what about their policies in relation to slavery and human trafficking, or what's the organization policy, what's their values in that particular aspect, and what's the due diligence process, how they actually check that the organization is maintaining these aspects, organization is not violating the human rights or employees rights in their own business and also in their supply chains. Supply chains means from they actually purchase their raw materials and to which they are selling their products, their customers. And also they have to report on uh, what's called the risks of slavery and human trafficking, whether there is any sorts of risk, what based on their due diligence process, based on their evaluation, audit and check, they have to identify what are the risk, whether there is any risk, and what are the process they would like to or the steps they want to take or they have taken for mitigating those risks, and what about their what is the impact of those steps, what are the steps they have taken, and whether the steps are actually effective or not in case of mitigating or in case of reducing this the risk of modern slavery and human trafficking or human rights violations in their organization. Each and every organization um, whose whose revenue annual revenue is 36 million or more, they have to report every year compulsorily these aspects to the government. And also they are supposed to provide training to their employees in terms of human trafficking so that human trafficking or human rights violation is not happening in the organization. Another aspect of reporting, this is also a compulsory reporting just started. Um, UK is the second country which made this task force on climate related financial disclosure compulsory for the corporations. The first country initiated or the made compulsory is New Zealand, and the second country is UK, where organizations are actually supposed to develop voluntary consistent climate related financial disclosures. So that would be useful to investors, lenders, insurance underwriters in understanding material risks. So in terms of financial reporting, corporations will report financial aspects as well as they will report on these the risk of the organizations, particularly four particular issues they have identified in the law. What are those? The governance, strategy, risk management, and metrics and targets. These are the four aspects organizations supposed to um, provide information in that particular report. And they have specifically suggested 11 disclosures, specific disclosures they have to make, so that the financial organization actually can identify the risks of their investment in that particular organization, right? So this is compulsory for the UK's organization as well. So as an accounting student, as a finance student, we should be aware of this particular law in place as well. So as I have been talking in details on these issues. So as an accountant, if as a financial manager, as a member of a particular organization, we each has some role to play in case of sustainability reporting, in case of integrated reporting, in identifying this information, in measuring this information, in reporting this information in our financial reports, right? How, to what extent our organization is exposed to these risks or these types of human rights violations. We are supposed to report accurately, and also not only report but also justify this information, evaluate this information internally and externally. This is what called internal and external audit, right? So audit, as we know, audit means justifies this information, evaluate this information, right? And assure this information that yes, these are the information that we are reporting is assured by third party, assured by someone, evaluated by someone, that these are accurate information that we are provided in our reports. So the organization should have an internal mechanism and also in some cases external mechanism or framework or design to review this information, to check this information whether the information are accurate or um, or right information that we are providing to the decision makers. So in the second part of the video, I will be talking about a little, is not too details, not to be, a little about the ethics or ethical role or aspects of the accountants.